Well, Chuka Nwachukwu, head of fixed income at UBA, is back with us for an update on the trading at the fixed income market. Well, thank you so much, Chuka, for staying with us. We were talking about before when we had to go away for a moment there, your expectations on the MPC outcome, not up to 100 basis points, you said.
Yeah, not up to 100 basis points, though I've predicted that there will be increase, but I thought it would be around 50 basis points, and a lot of people felt the same way as well, but 100 basis points is not a big problem at all.
Well, what does this mean for rates going forward, the yields at the market going forward at the treasuries and the bonds market?
Yeah, like you mentioned earlier, there's a NTB auction today. Well over 213 billion was on offer. Incidentally, the result came out some few minutes ago, and we saw about 85 basis points movement in yield, from 13.99 to 14.84 or thereabout. So that is a clear reaction to the MPC meeting yesterday, the MPC announcements yesterday. And then we've also seen that throughout our trading today, that the market has reacted. We've seen an upward movement in yield to almost about between 50 to 70 basis points.
Right. I'd like to come back to that, but let's just quickly talk about the Naira at the INE window. Can you quickly bring us up to speed on trading there at the INE and NAFEX window? Any changes in terms of supply?
There have been a slight appreciation on the INE window. We saw market trade around 445 yesterday, and then today is trading around that levels. So there hasn't been much movement in terms of rate, but I think what we've seen, the slight appreciation we've seen is as a result of intervention from CBN.
All right, let's go back to the fixed income market. So 180-day, 90-day, 380, 364-day. Talk to us about the rates that we're seeing. We know we've seen that steady climb. I believe the one-year bill was trading somewhere at 13.9%, but bring us up to speed in terms of where we are with that.
Yeah, we've seen little activity, especially on the secondary market, but where the activity is happening is actually at the auction, which is the primary market, where we've seen, like I said earlier, about 85 basis point movement in rate, in use, pardon me, from 13.99, it came out the last auction, to 14.48, and that's quite huge in terms of movement. But like I said earlier, it's also as a result of the MPC, it's a reaction to the MPC announcement, and where we see about 100 basis point movement in the MPR from 15.5 to 16.5. So this will definitely continue through the end of the month, and then hopefully the end of the year.
So in terms of how this impacts on the borrowing, domestic borrowing for the DMO, for the federal government, what does this mean? Because we've heard the DMO talk about how rates at the domestic markets are high, they're quite high. Rates at the international, well, that door for the international market, that's pretty much closed at this point. But obviously this has implications on debt service, our stockpile at this point. What are your thoughts on that?
Yeah, absolutely. It has an implication on the debt service. But however, we also look at the flip side, which is the positive side for the government. So what they are trying to do, with this rate hike is also to invite more investors, especially the local investors, because what it means is that the yield will be very attractive. And so, we are looking at seeing around 18% in yield, and this was something that haven't been seen well over about 4 years ago. So that will bring in a lot of attraction into the fixed income market. But on the other side of it, which is the cost of borrowing, it will obviously impact in government cost of borrowing, and then government will obviously have to make more provisions for debt servicing.
Now, this also impacts the corporate bond market for the corporates themselves. Last year, we did see a number of commercial papers being floated by these corporates, but it's a different story this year. Just recently, 7 Nigerian banks, 2 bank holding companies were downgraded by Fitch because the sovereign was put down to a B-. So what does this mean for the corporate bond market, for the corporates going forward in terms of raising cash?
It's also a positive for them because all the bond issuance, take a cue from the FGM bond. So if FGM bond yield is going up, then it means that the corporate bond yield will also be up as well. Don't mind, let me just say that about 2 days ago, there was also a Sukuk issue, and about 10 years Sukuk issue into the market, about 10 years Sukuk, and then that's around 15.5. And so, all these bonds within this bond space in terms of a yield will also attract a lot of investors. And so for corporate bonds, if the yields are very favorable and then very competitive, and it will obviously attract investors into that space. I'm
happy you mentioned this Sukuk. I had a conversation recently with an analyst, and he was talking about all the benefits of the Sukuk, floating a Sukuk, the Islamic financing, and all that comes with that. But it would appear that it's, in terms of penetration, it's not. We're still scratching the surface. So this is obviously a good avenue for the government. So why aren't we seeing that much traction?
I think the Sukuk that has been issued so far has been very attractive, and I think in fact, some of them have been oversubscribed. Why government isn't issuing many of these Sukuk, I think is left for government to answer. But I think that the market is very receptive of government Sukuk because they are really attractive. And so if we see more Sukuk come into the market, the investors will obviously embrace it.